So guys, what I'm trying to look for here is a short opportunity, but I'm very concerned about the 15-minute structure. You see, I want to see whether they are grabbing liquidity here before they continue pushing up. But the way this previous 15-minute candle closed, it's like they were mitigating something here, maybe to push the price down to this order block here or to this 15 minutes wick. So what I'm doing, I'm doing a multi-time frame analysis between the 15, 3 and 1 because that is the time frame I normally use. So I can also look at 5 minutes. You can see that the 5 minutes break of structure is around this place and they have protected that zone. So when I go to the 3 minutes, right, you can say it is this place, or others can mark this zone here. It depends with the preference. But after such a big move, I want 1, 3 and 5 to confirm first, right? So I also want, you can see 1. So if they can mitigate this failed dollar block here, I can add this week. So if it is a short opportunity, I'm looking for it at that zone because they have mitigated this structure, they've mitigated these cells, and this is the failed order block that couldn't take out this high. So if they come here, and this is the 1 minute time frame, probably I can do something like that. And the breakaway, these two breakaway candles, I put my stop loss just above where the real move started of downward pressure. You can put it there, or if you want to be safe, you can put it there. And I want to target this zone. You can take something here for TP1, but for your confirmation, you just go to the 15-minute structure to find where you can target, right? And you can see that this order block here, which is around 4:1. So I want to take, these are the shots that I can take. The only thing that is, you see the 15 minutes candle closed. It's like they were mitigating this wick here. Right? That is the only drawdown. And you can see also here, they protected the 5 minutes change of character. This is the low time frame change of character. So you can still get in here, but you can put your stop loss tighter, right? Something like that, so that we target these zones that way. So that is what I want to take. So this is what we normally want to see. If you can get that confirmation there, then that is a good zone to sell here. Or if they break this structure here, you can see that they will mitigate these zones again, right? So this one was a good one because you can see probably they didn't touch, but the idea is valid, right? We started from the 15 minutes. We said that we didn't want this 15 minutes to close this way, but we also wanted them to recapture the order block, this failed order block here, right? And this one, you can see it clearly in the 1 minute, right? You can see it clearly in this one here. This failed order block that couldn't take this high, this is your first entry. Your second entry is, if they change character here, then which order block couldn't take out this order block, you see. So you can enter using the 2022 ICT, the market structure shift, and it comes back to the fair value gap, and then you target the next liquidity zone this week or around this order block here, which we were looking at the 15 minutes. So if, for example, sometimes the price will normally not sometimes get to our zones, right? This one here. But another good entry that I forgot to mention is this zone. You can always put a buy limit here, a sell stop here, so that it gets here. You don't want to go back again and test this high. So what do? You put your sell stop, sell here, then your stop loss there. Then it's the same idea. You look for the next liquidity zone, but it's always nice to weigh the trades. You see, what do they want to do? I mean, you analyze, you see the risk to reward ratio. Because if it doesn't make sense, you don't have to take the trade, because there's always another day. Like this one here, what you can do, you can also mark this zone, right? Because this is the order block that took out this low, and it has a clean breakaway. You can say there is volume here, right? Inefficiency here. So what you would expect to see is something, if they test this zone, then they can now push price lower, right? So that is how you can look at it that way. And you can still put this zone, this failed order block, because they made a high, they came low, I could even have marked this big one here. Probably it makes sense if it wasn't swept, this one there, you see, because these buys here couldn't take this high out. So what does that mean? It means that they need to go lower to, for example, to look for more orders, try and take that zone out. So that's how you, in essence, that is that is what order blocks mean. So if they can come to this zone, to try and take price higher. If it fails, then you know that these sellers here will protect they will protect this zone, in the sense that it will come to this zone to sell, or this fair value gap, according to ICT 2022 mentorship here, right? Yeah, because this is now confirmation of 5 minutes break of structure. So if you go to the 5 minutes, remember we are in the 1 minute time frame. If you go to the 5 minutes, let me just delete everything so that you guys can see. 5 minutes, you can see 5 minutes was this zone, right? That zone. So you can see that this 5 minutes move was mitigated with this high. So these buyers here, they couldn't take out this zone. So what happens next? Now the sellers are in charge now, because they have completely shifted structure. So for them to successfully take out this main high, they need more liquidity. And that is what you are. Remember the time frame. Remember that it is a bullish market. So you target the most recent liquidity. Recent liquidity. For example, if you do the 15 minutes chart, because that is the time frame that we are looking at. So you could even target, if you enter sales there, we can target this low, right? This, if they sweep this, but the main target is this. Remember that we have buyers here who are not filled properly, but this 5 minutes candle doesn't have a wick. That's why you project that they can fill at least 50% of this wick here, right? So that is the breakdown of our idea. So let us see whether they are testing the zones that we had anticipated. So, sorry, I was thinking breakfast. So what you do is, let us just try to go back to the main chart we see. So remember we said that this could be the zone, or the ICT mentorship is 50% of this fair value gap, at least, you enter at that fair value. So it depends. That's why if you're using the low time frame, you have to manage the trade. But in a higher time frame, you just mark a candle that is big, yeah? But for the 1, 2, 3 to even sometimes 5 minutes, you have to be there to see whether this trade will now play out, whether this failed order block, this one, if they mitigate it, they will now push price lower, or at least these buyers here have to be filled in before they push the price lower. So that is it, that one. So you can put, if for example you want to enter, according to the ICT 2022 mentorship, this is the zone. But if you are looking at the 5 minutes, this whole order block has failed. These buyers couldn't take the price high. So they need to mitigate something. Did they mitigate this zone? Yes. This is what I was telling you. So they mitigate all unmitigated zones to try and take out this high. But they will first have to take out these sellers who want to sell on this order block here. So that is how you see they mitigate, they try. If they fail now, you know that this level will not hold. What is the next level that can clearly be seen? It is the main target that we had around this 15 minutes order block here. That is how we look at it, 15 minutes order block, that way. So that this way it is very possible for you to wait on the trades, because if you are a scalper and you are entering on the first zone here, you see, you just target the most recent unmitigated zone, which is this one here. So probably that was your taker. But if we use the intraday, you see they mitigated this week, like we were saying, this main week here. Just the same way we are anticipating for the 15 minutes one, just there like this one, they can also come and mitigate these zones if the orders that they picked here cannot take the main high. That is how we look at it. So that is one. You see now they are at this level. So if you had entered there, all this zone, you could just put your stop loss at that high, because you don't want that high to be taken. If they take this high out, you know that they are coming for at least these zones here, right? So if you do that, that is your 1:3 ratio, because that's normally what I target every day. Like here you enter at 80, stop loss at 82, that is 20 pips, and you target 60 pips. And probably you can call it a day. Or if you are you also wait for the same thing that we are looking in the downtrend is what you wait for in the uptrend, right? Where you wait for them to recapture failed order blocks, right? So we know that this was the target. They have mitigated this. They couldn't take out the main high. You see, they couldn't take out this high. So they just filled their orders here with this 5 minutes order block. That's why I was telling you guys, it is good to wait for the 5 minutes break of structure, which happened here in the beginning of the video. That's why you concentrate between the 1 to 5 is always very good, especially after such a big move. That is where you now decide not to enter using the 1, but you look at these all these three time frames, right? So that is it. So guys, as you can see, we are way high. We are way much high. We are tuko juu sana, yani kizungu kinanichanganya, but anyway. So, and you can still see we are protecting the market change of character. So when price is delivering price to where it is supposed to go, that is one of the ways that, because some people can always be conflicted on how do I decide when to close this trade. So ideally, personally, I always target 100 pips every day. But if I'm in a move and I'm on the charts, I can also have this momentum trend line, this one. So you can put it that way, or if you've already gotten your 100 pips, you can just put it that way, so that this one will change momentum Now that from there we know that we are no longer on a downtrend, but we are probably shifting to the upward side. But as long as they are protecting the highs, you know that the price is delivering to a specific target. Probably this this was it that one? No, it was this one. Yeah, this whole Asian kill zone move. So there's a lot of orders here. Probably they come and collect them, then they try now to attack the main high, right? But if, for example, on the 15 minutes, because it's good to go to 15 minutes, you can see now on the 15 minutes, we also made what? We also made a break of structure here on this low, right? But if you want to be safe, you can, yeah, on this you can say even there, so they can retest here to come down here. So what do you expect to see if price retraces? There are two things. As a day trader, we have already you can meet your objectives. 100 pips is a lot, so they can do something like that if the objective is to come to this zone. But if the objective is to continue, they probably won't test this zone. They'll test 3 minutes, like I said. Those are the, because you can see the break of structure for the, so this high took out this, so 1 minute confirmation is there, but 3 minutes and 5 minutes is up here, which aligns with this zone that we are anticipating it can be tested for them to bring price to this zone.